Hello, YouTube. Did we just hit a trap or is the stock market crash now over? That's what we're going to talk about today. So what we're going to do is provide a quick update to the seasonality chart. We'll look at that in a moment because when we look here to a line chart, it looks like we actually got a little bit of a dead cat bounce or very similar to what we were looking for here. We get one cut, two cut, dead cat bounce, and really start going sideways. So that could really be the trap here. Here's our first cut, there's our second cut, and now we're actually managing to go mostly sideways. So what's really important to keep in mind is that the seasonality chart only cares about one price. It is the price at 4 o'clock. So what really drove the market today? Why do we maintain the uptrend, and where are we going to go from here? Well, overnight we saw that Moody's cuts the ratings on 10 US banks and puts some big names on downgrade watch. So this is shortly after we saw that the US government actually got a downgrade. We look here to another headline. Moody's downgrades US banks, warns possible cuts to others. So that's really what drove the market today. And oh my goodness, did we see greed? Sorry, did we see fear come into the market today? This morning we were at about 64, but by the end of the day we managed to tick all the way back up to 70. The percent decline on S&P at about 0.4%, and QQQ at about 0.8% is actually not all that bad. There was a winner today, though. It was the Bitcoin. Bitcoin went up nearly to 30,000. It is flirting with its 50 DMA. And this tells me that even if the S&P did recover and the NASDAQ recovered, people are still a little bit skeptical. They're thinking that there might be more problems with banks, which is why they want to bid up Bitcoin. That's what I'm noticing. If we go a little bit further into the news, what are we going to notice? Well, it's a little bit red everywhere, but this does not really look all that bad. Part of the reason why I think we didn't have a worse move is because we already did a lot of down in the last week. So we look here to the last week. We've already had a lot of red. We gave a big warning yesterday, and hopefully you guys were able to take advantage of that. If you don't mind, I'm going to ask for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. Thank you ahead of time. So I think that because we already saw the U.S. government get downgraded last week, a lot of the declines have already been baked in. We've seen that fear come back in, and the short sellers are still ready, willing, and able to buy the dip. So we can't forget that there is earnings season, which is currently wrapping up. No major companies that I think can move the market, but there is a big number coming in on Thursday. It is CPI. So with that consumer price index coming in on Thursday, we have to know whether or not we are either going to have a trap, which is why the title says trap. I thought you would click on it. That's why we put it in. Or if the stock market crashes over. And I think it really comes down to whatever the CPI print is on August 10th. If we're going to do the seasonality chart where, let me just see if I can pull that up again here one more time, because I've talked a lot about the bear market, but today I'm going to give an update in terms of some relief. So if we're going to get relief, what we should really do from here is go sideways tomorrow, go sideways a little bit more, maybe form a lower low next week, but we don't quite hold it. And then we rally up to close the month out higher than we opened. So that would be marginally green. So I went through a lot of these different scenarios on the weekend. We talked a lot about it. So let's just see if we can glean what actually happened in the market today. So here's what I'm noticing. I'm noticing that we got pretty close to yesterday's high. We had a high of 450.7 today. Yesterday's high, 450.87. So until we get back above the 70% retracement, or roughly 452, I would say that right now the S&P is going sideways. Now I would say it's going sideways because we're currently throttling, or basically right on this uptrend, but we are not sure we're going to hold it. Today we were below at the open, then we came back up. A couple more days of sideways, and that's going to be it. We're going to be actually going down. If we look over here to QQQ, what's really interesting is that we nearly hit the 50 DMA. So the 50 DMA is the short-term price. So if we bounce off the short-term price, what does that mean? It means the short-term price is support. That's what it means by definition. When we're over it, it's support. When we're below it, it's resistance. Same thing here, though. We are still currently below our exhaustion gap that we had here on June 16th. We are below our uptrend. We noted Apple yesterday. We noted Microsoft. They are still weak because they're below their annual high by being red on the day. Actually, sorry, Apple's actually green on the day today. We'll look at that one in a moment. But anyways, to finish off the story here on QQQ, we dead cat bounced off of the 50 DMA. And now the question is whether or not we're actually going to maintain these lows right here, because we formed a hammer. A hammer usually means that we dipped down, came back up because we found dip buyers. So dip buyers came in on that 50 DMA. If we manage to go green tomorrow and then also reclaim 377, or that Fibonacci area at the 78%, I think it's about 375.66. So what that means for me is that if QQQ is back above 377, it likely also means that the S&P is now over its 78% retracement as well. And then we're really looking to see if we can actually get inside this gap. And that'll be so important for me because we noted that we have one, I don't know, I think that gap got filled. We got one gap, two gap, three gap. We got more gaps, right? Four. We got four gaps to the downside, which means that as we were going higher, we left all these holes, which eventually are going to have to get filled. If they're going to get filled on this current move, man, that's going to start to really hurt. We're going to be going down to fill all of them. So this current gap we left on the upside could be the same thing as the first gap we left to the downside, where everyone's looking for it to get filled. It just never does, myself included. And now over here, if we don't manage to get over that 452, we are not going to enter that gap zone. That's basically what I'm looking for. It's very simple this week. And then as we look to QQQ, very similar story where we still have that upside gap here to the upside. We're looking to get to 380 or about another 8-point rip, about 2.5%. So if we don't manage to get back over 376, we're not going to get to the gap fill. We're going to leave it there to the upside. And as a reminder, we left a whole bunch of gaps on this chart as we went higher too. This one here is still not filled, not filled, not filled. That one is almost filled, but not quite. Another gap here. And we got another, no, actually, no, that's not a gap there. So we got 1, 2, 3, 4, 5. So we got 5 gaps to the downside. There are holes on the chart. There is clearly a battle happening. And QQQ as our leader is now no longer going up and is currently forming some kind of flag here. So the flag is going to be very important. If we get back above our relative high in June, means we're also going to be above that 376 area. Let's now look at some weekly charts here. So let's pop over to Apple first, because Apple is the king. And as we noted on the 12-month chart, we go back here. Let's just go to the 12-month chart. We're not quite yet above 183. So I really want to see Apple back above there to show that the king is going to drag us back to those blue sky breakouts and we can actually manage to go higher. This will be particularly important because as we look here to certain charts, I mentioned this on our pre-market stream. So if you want to consider joining us, you can go to thealgo.com to trade with me, Justin from YouTube, for 14 free days. But anyways, what I was looking at here is XLK, which has a large weighting on Microsoft and Apple. So if we look here to XLK, what do we note? Well, we got a new high alert, which means new all-time highs. We have this box, which we've been battling with. It basically forms either a massive W or it forms a cup and handle. And the reason why this is interesting is because we had another template we were looking at before, or the DAX, where we have a very similar pattern. We have that all-time high on the weekly chart. We come down for some kind of a W or a win for the bulls or some kind of cup with a handle. And now we're actually below this area. So because we're below the box, it means that this is not just easy. There's been more than indigestion. We're actually not sure if we're actually going to go back to all-time highs. I do see some kind of micro inverse head and shoulders forming here, but this could be what happens to XLK. So XLK could potentially be going through a few months of going sideways. May, June, July, that's 3 months. Let's look back to XLK because this one here has a 50% weighting. That's right, 50. Half of XLK is Apple and Microsoft. So because those stocks are basically around all-time highs, just slipping back below, that's why XLK is there. So what do we have? Well, we hit our new all-time high in July. So that would take us to July, August, September, potentially October. That seasonality chart says that in September, we go up, we go booms, we go to new highs. So that would line up perfectly here with September, if that's what we're going to do. So that's the template for us to go to new highs. However, if we now look at a different chart, we can try to see whether or not we're actually seeing if there's more pressure being added by more things than just the S&P. We look here to the dollar. The dollar now has 4 hollow candles in a row, which means it is trying to bounce. I'm not sure what's going on here, to be honest. We got a head and shoulders. It's getting sloppy over here on this right side. We stopped going up. We're below the 50 MA, but we're over the 200, which means I'm really not sure what's going to happen here. On the daily chart, though, what we can note is that we're actually trying to reclaim that 50 DMA just like Bitcoin is. So the dollar is going to move the market for better or for worse. We have to be very mindful of that. And now if we look to the VIX, this is something that, again, if the stock market crashes over, well, the VIX is kind of telling us that, man, we kind of flushed out all the volatility because from yesterday until today, we hit a high of about 15%. That is a big move on the VIX. 15% is a big move. We can also note we're now back down to 15. It's a low teen. And low teens just mean that the market is calm, it is cool, it is tranquil, no one is worried, just like we saw with that with the fear and greed index. So if you want to see more about the crash warning, please queue up here to that video on the left-hand side. If not, thank you so much for watching, and I look forward to seeing you tomorrow. Thank you again.